Good morning, my beautiful people. It is yet another day again, and today I'm going to do a general strategy. Okay, I've received some requests how you can be able to use an ADX. Let me just try to first make us understand what an ADX is. When you open to the indicators, or let's just come to the indicators. The ADX is this average directional movement index. Average directional movement index. So in short, it has three moving averages. And these three moving averages, they are all meant to perform special tasks, okay? All the three moving averages are meant to perform special tasks. And in these moving averages, it measures the momentum of the market. It measures the momentum of the market and the volatility of the market. For example, let's just come and open this that we've attached, okay? So there is the DMI plus, DMI minus, and then the signal line. Okay, so the DMI plus always represents the buyers, which you see is in green color. The DMI minus always represent the sellers, and you see it is in a red color. Okay, this is customized. I've put my own colors to be able to easily identify. The period, which is 14, is the period that is measuring the volatility of what is happening, or the momentum of what is happening after every 14 candles. Okay, so anytime you find, and this period 14 is measuring across all the three lines, the one for the star, the D plus, and the D minus. Okay, so after every 14 candles, it's taking an average. After every 14 candles, it's taking an average. Okay, so the D plus and the D minus are always meant to work in the opposite of each other as per how the market is behaving. If the bears are in charge, you will always find the D plus, which is the red line on top, this red line here. You will always find it on top on this side, like trying to go up. If the bulls are in charge, you will always find this green line on top, as you see here. Okay, if the bulls are in charge, you will always find the green is going up, the red is going down. So these two lines are always meant to work against each other as per how the market is behaving according to who is in charge. So if the green is going up, the red is coming down. So how do you know where to place a trade? There are two ways of trading using an ADX. The first way is when the red and the green cross, but that is not always an assurance of a perfect trade. Now let's come to the white line that we are seeing here. Now this is the signal line of an ADX line, of an ADX indicator, I mean. So this indicator measures the momentum or the volatility of the market. If it is very volatile, you will find there is movement in the market. If it is like lying low on a straight line, you will find there is completely no movement. Okay, for example, when you see from this line going up, so our average line of where to know when the momentum is going up is this line, level 25. Okay, so every time you find this white line going on top, it tells you there will be movement in the market, and who will be in charge at that time is the line that is coming above. If it is the green, it is the bears who are in charge. If it is the red, it is the bulls who are in charge. Okay, so try to look for trading opportunities when this momentum has gone up and according to the color that is going up at that time. Okay, so this would have been a proper opportunity around this point here, around this point, and mostly especially after it crossed 25, around this point here. And what was supposed to have told you, are you supposed to place a buy trade or a sell trade? It was supposed to be a buy trade, because you see, according to this point here, it was the bulls who were in charge going up and the bears were going down. Okay, so any line that is above this 25 that is going up is the one that is in charge. So if you had to wait until it reaches level 25 around this point, as it's going up, to tell you that the market will be having some momentum, then it is a buy trade from around this point. Okay, so another better way is that if you can be able to add some of the levels that you can see were reversal points, like you see around this point here where it was crossing. When you came here, you found that it was a strong resistance point. So here it was resistance, here it was resistance, then here it turned out to be support and went all the way up, and here it used a support, 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 support. So it is a very key line. So if you're able also to mark those points, so that when the market breaks those points, you will know that we are now on a general uptrend or a general downtrend. Okay, now how do you add this to the TDI indicator? The TDI indicator generally works like, if this RSI 13 line is above level 50, that is to tell you that the bears are in charge. No, the bulls are in charge. If it is below level 50, it tells you generally that the bears are in charge. Okay, so at this point, while we were crossing, you come and check if we had crossed our market baseline. So another point is that our Bollinger Band on the TDI, the lower part of the Bollinger Band represents the sellers and the upper part of the Bollinger Band represents the buyers. Okay, so if at this point you are seeing it is the green line that has gone on top to tell you it is the bears, the momentum will be going on favor of the bears. Come and check if your TDI has already crossed the market baseline and is on top of the Bollinger Band. That is another plus sign to tell you now that we'll be moving in favor. And especially if at this time, when we are crossing this point down here, let it be that also the TDI has crossed the market baseline, first point, and then the TDI also should have crossed the level 50. Okay, you see here, level 50. So the TDI should have crossed level 50. So that is to tell you that the three indicators that you are using to check this trade are in line with your strategy. So at that point, by the time it breaks this resistance that was here, you are comfortably to place a buy trade. Okay, so another rule to remember very keenly is that as long as the green is still on top, always look for buy opportunities. Okay, always look for buy opportunities. Like you see, we broke our resistance here, we went up and then it retraced a bit. So you are not supposed to try and sell if it is the green that is still on top of the ADX. Okay, and it retraced, as you saw again the first reversal candle. As it started going up, you can place another sell, go with it, let it retrace. As it gives you this this engulfing candle that engulfed these two, you knew that again the market has reversed, go with it. So you can always choose to close on top here, let it retrace, come and buy at the bottom, let it go with it, or you can just choose to leave one trade to run all the way until where you feel you are comfortable. So mostly, where is your reversal point? Okay, my reversal point would be if this is the place of the TDI that we broke our trend and we went all the way, we came zigzag, we came to the market baseline and then went up a bit, and then when we started hitting the lower Bollinger Band, okay, as we went up this time round, I would have exited around this point, okay, because this was almost even the third time hitting the peak, which is level 68 of the TDI, of the RSI, okay. So every time you touch this level, it tells you that we are ready to reverse, okay. It tells you we are ready to reverse. So this could have been my exit point, okay. So you see it retraced a bit and then it went up. This time round it didn't even go up completely, ranged a bit, and you see it came and you know, around the market baseline here. It came and stayed around the market baseline. And as at that time, while all this ranging is happening, check what the TDI, not the TDI, the ADX is doing here. Our white line that we were using for our momentum or volatility is below level 25. That is to clearly tell you that there will be no movement in the market. So don't try to place a trade at this time. Okay, don't try to place a trade at this time until at least when we reach this point where you see now the red is on top of the green. So the green has clearly shown our way, it's going down. That tells you the red is the one that will be on top. Okay, the red is the one that will be on top. So if the red is on top, that shows you it is a bearish market. So the momentum has started from this point, and when we come and check our TDI, at this time we are completely on the seller's zone as we are coming down. Okay, we are completely on the seller's zone as we are coming down. To add again, we are below level 50 of the TDI. So below level 50 of the TDI, which is now a seller's zone. So you would have placed your trade here around this point, or even here. Yeah. So as the green one had clearly shown you that it is below, so the red one is the one on top, and now the white line is getting the momentum. So at this point it was clearly a downtrend. So you rode all the way until at least you see this point here. It even gave you a very good indication when they are crossing. You can always close before that. As this green is starting to face up, it tells you the bears have now started coming into the market. As it starts coming up, you can always close. Okay, you can always close. So this strategy works well for all the volatility indices. Like you see, this is volatility 100. It works well for the volatility indices. It works well for all the currency pairs, except those moments when there is news release. It also works well for the commodities like the gold and oil, and it works well for the boom and crash indices, but on a higher time frame. Okay, on a higher time frame of 30 minutes and above. Why do I mean 30 minutes and above? Let me just open a new chart of Crash 500. This is H1. Let me just add insert indicator. Trend, average directional. The settings are still the same. So what I meant in higher time frame is this: you should be able, let me repeat again, you should be able to see the chart as a normal chart, not as spikes. Okay, and how do you know the trend when you know as a normal chart? If you go on the lower time frame H1, you will see what is happening. Okay, when you're on the H1, it is completely different. Like you see here, the green is always on top, because Crash is always meant to crash going down. So as it crashes going down, as it starts going up, you will find the green is always on top. So it doesn't work. These spikes must be silent. That means not even M5 can work with this kind of strategy. It doesn't work. Okay, even M15, it doesn't work, because you will find most of the time on M15 as well, the green one is always still on top. And then during the times like when it is going down, you will always find that our momentum is even coming below. Okay, our momentum is coming below level 25. So it still does not work on M15. So when you want to trade boom and crash like any other normal currency pair or indices, you have to go to M30. Yeah, you have to go to M30 and H1. Please note that again. You have to go to M30 and H1. Okay, now like here we are on H1, and our chart is normal bar charts. Okay, it's normal, not bar charts actually, it's normal candlesticks. So no more spikes of going up and down. Okay, check from this point here to this point here. We are ranging. Check our momentum. We are coming below level 25. So where is always your exit point if you are going with a trend? Every time this white line will start reversing to face down, it will tell you that whoever had been in charge while we were going up is exiting the market. This point, when the white line is coming down, it tells you that whoever had been in charge, whether it is the bulls or the bears, it tells you they are exiting the market. And so anything can happen. Either the trend can reverse, or it can just go into a dormant stage where there is no movement. And if it crosses below the level 25 to go down, you better leave the market at that time and wait for the right time, like this point here, as it's going up. And as it's going up, you see we are going up with the color green. So it tells you the bulls are still in charge. Okay, it tells you the bulls are still in charge. So you can catch a few pips. Okay, but don't use this strategy independently. Add it to a TDI indicator for you to get the exact points of where to place. So anytime you see this, try to avoid. Anytime you see this, try to avoid. As long as our line is below 25, try to avoid. But this one here didn't cross 25. It reached this point, and we can clearly see the green was still in charge, and then it reversed a bit, came again to this point, and then immediately the green went shoot up, and our momentum started going up again. So this was a very sweet point to place your trade. Okay, as our momentum is picking, so you could have placed your trade around this point or even around this point. That was a second entry. So as long as the green is on top, only look for buy opportunities. When the red is on top, only look for sell opportunities. Okay, and the white line should be above the level 25 to tell you that there will be movement of the market. Okay, and here when the market is ranging, you will always see from your this one, the volatility line or the momentum line. As long as it goes below level 25, expect that there will be no movement in the market. It will be ranging for some time. So only wait for the beginning of the trend as it starts facing up, as it starts going up. Okay, as it starts going up, that is the beginning of a trend. So as it starts going up, check which color is on top of which is on top and which color is at the bottom. So you see from this point, the red line, which are the bears, had been consistently facing down. Okay, so it was so easy to predict here. As our white line was showing us the signs of trying to go up, our red line, the bears, had consistently shown that they are going down, and so the bulls were in charge. So this was a sweet point to enter and catch a few pips. Okay, and so maybe you caught from here to here, and then from there now, as it starts changing direction back, that is a point to exit. Okay, so that's it for this tutorial, guys. I will be bringing more tutorials on how to use the different indicators, but if you are able to use the ADX properly, adding the TDI, I'm so sure you will be able to get winning signals, because this ADX line will clearly show you what is happening in the market. You will never be able to struggle when you place a trade and it doesn't go in your favor, or you place a trade and then it ranges for some time, because the ADX will surely sift the signals for you. It will show you when the market is ranging, and it will show you when the market is ready to move. Okay, so it will sift the signals for you. So that's it for this tutorial, guys. God bless you and happy trading. Bye.